me bring in our guy, Paul Seegert. Paul is with PCS Healthcare Advisors, and they consult businesses on healthcare costs and keeping costs in check and the like. Paul, how you been?
Great. How are you?
I'm doing good. So, all right, you hear that and go, okay, is this just fearism? Is it a real deal? 29% increase, something like $800 or $900 a year, is what the premiums are going to go up in the Buckeye State. What's heading this in direction?
Well, what we've got is a system where we all don't pay equally. If you have government provided care and you show up at a hospital, as an example, they're gonna charge you a number that's even at a loss for them. If you show up and you're on a jumbo employer plan, they're going to charge you maybe a reasonable profit attached to the cost of the transaction. And then if you show up with an individual plan, then you don't have that buying power of those big groups, and you're on your own. They may charge you 3 to 12 times what they're going to charge those other categories. And the same thing carries on. There's other wastes that you're subject to in prescription drugs, where you don't really have any. You're kind of on your own advocate. You don't have anybody to look out for you, unfortunately. Yeah. So it's the best place for these companies to kind of rape and pillage.
Yeah. Well, it's like a union thing, right? If there's protection in numbers. If you have the numbers of a group plan, you could take your business elsewhere. But if you're just a little guy, one person, where are you going to go?
Yeah, and you would think the insurance company is going to be looking out for you, but the way we've created the compensation model for insurers, they do better when claims costs go up. That was the biggest unintended consequence of the Affordable Care Act. Mm-hmm. We told these insurers, so long as they spend 85 cents for every dollar they take in premium on a claim, they can keep 15 cents. Mm-hmm. And we've watched, if you look at our report card in the last 12 years, deductibles are up 87%. Premiums for lots of these plans are up more than that. So it hasn't gone well.
Yeah, it's untenable. Part of this, if you're buying the individual plan, buying your own insurance, it has to do with Congress, too, because, well, basically it's a subsidy, right? From COVID, there's money from that. That's set to go away, which is going to cost, your premiums are going to go up as a result. Is that what this is?
Yeah, that's playing into this as well. You've got people that are on Medicaid today because of kind of the way they did the public health emergency related to COVID. They gave extra money to the states, but they said, hey, you're not allowed to audit the rolls, so you can't recertify people every few months to make sure they still qualify. So we have as many as 14.5 million people that are on subsidized health care at the Medicare level that will lose that as soon as the public health emergency ends. Now, at the federal level, they're saying, well, we're going to give states 6 months or some extended period to start to certify, but they're going to stop their extra funding immediately. And you have to expect that states will then also fairly immediately start to recertify people because it's a massive budget item for a state, Medicaid.
Well, if you look at it, who's going to be able to afford private health insurance, right, or individual plans, I guess I should say, because if the costs go up some $800-900, who's going to be left to absorb that, and where are you going to go?
Right. We already have inflation across the rest of the economy, and healthcare has always run 2 to 2.5x the rest of inflation. And so healthcare inflation right now is well north of 10%. It's about 12% and expected to stay there for a couple of years. And that is another part of this whole equation. When it comes to renewal season, you can be sure. I just got a notice from our cell phone provider for our business yesterday that they were increasing rates because of inflation. You can be sure health insurers will do the same.
Yeah, well, there's no doubt about that, because you're going to continue to pay and pay. And so how many are we going to go back to the times where people are just uninsured by the mass? I know that when it was brought in, Obamacare was unpopular for at least half the country, but it kind of, if you look at the survey of people who are on it, seemingly they like it, right?
Yeah, once they realize, hey, I'm getting some help here, and now with COVID, we've helped quite a few more. And actually, we've created some moral hazard there. We decreased the uninsured rate through COVID from 10.3 to 8.8. So that's about 5 million people. Yeah. But we spent money on many more people with subsidy. We not only didn't recertify Medicaid enrollees, but we also took the ceiling off of that to 400% of poverty line, federal poverty line, for people to get some subsidy. Maybe they're not on Medicaid, but they're on an exchange plan, an ACA plan, where they get some amount of help. you could be a 60-year-old couple making north of $200,000 a year and get some subsidy with COVID.
Of course.
So you also have to scratch your head and say, does that make sense?
No,
Is that the best way for us to spend our dollars?
Right.
And when you look at the math, for every one person we got onto insurance for the first time, we also pulled someone else from insurance to subsidy. So they had it through their employer. They had an individual plan that they were fitting into their budget, and we moved them over. And we're not very good buyers at a federal level. We spend about $20,000 each person we put on insurance.
Wow. Why is that? Is it just because it's the government and they're really bad at it, or is there some underlying reason?
Pretty much, yeah.
Okay.
That's it. We focus on getting more subsidies. We put very little focus on, and I mean, this is the result of lobbying, most certainly, but we put very little focus on the cost, the value proposition of what we're subsidizing. So that's why these individual plans are some of the worst plans in terms of what you get for how much they cost. The consumer doesn't necessarily see that inequity because they're not paying the whole bill.
Right.
Were they, they'd probably be in the streets with a pitchfork. Because it would seem so unreasonable that you're functionally uninsured unless something catastrophic happens, and still spending $20,000 a year to put your wife, and a couple kids on insurance that you don't really use.
In the way to look at this too, and this is the eye-opening moment for you, if you don't think about health insurance all that much, or you're blessed to have a good plan through your work, is the fact that if you have, I don't know, a great example would be the LASIK, right? That you can go, and the prices for LASIK when it first came along were very prohibitive. Very few people could afford it, and now it's like I've seen like $99 an eye for crying out loud, in which most people can afford, right? And that's because for a long time there's no subsidy there. You pay the rate, or you go in for, I don't know, women go get Botox or injections. The same thing. It's not covered by insurance, and there's the cost is relatively cheap. If we looked at and applied that to other avenues of healthcare, the needed stuff, the important stuff, you'd go, well, wait a minute now. How come this is so cheap and this is so expensive? Because of what you're talking about.
Well, I'm a great example of that. When you take the insurance payment model out, to your point, you get higher quality and lower cost because you have free market forces. I'm a healthcare nerd, so I have like a stop loss on myself and my family, and then I present as a cash payer when I consume healthcare. I have a hernia repair next week, and the facility charge will be $1,400. I'm going to pay $500 for an anesthesiologist, an hour of his or her time, and I'm going to pay less than $5,000 for the surgery. So all in, single digits, thousands of dollars. And this same surgeon will do 5 of them that day. The rest are going to bill 3 to 4 or 5 times what I'm going to pay because of the insurance payment model in the middle of it.
Yeah,
very inefficient.
Yeah, it's the whole model's inefficient. But of course, as you mentioned, the thing that drives us on both sides of the aisle, Republican and Democrat, lobby groups. And if you get rid of that money, and all of a sudden now we start legislating stuff that makes sense for people as opposed to those lobbyists.
Yeah, the role of government in this case would be to just create some common sense rules that set up a free market where where providers, hospitals, the pharmacy part of the industry all compete for your business and publish their pricing, and you get rewarded for making good consumption decisions, just like we do with everything else.
Yeah.
You have more than one lot selling a Ford. They have to figure out how can we make our value proposition better than the competitor, and it drives value for the consumer. Yet with this massive fifth of our economy, we don't have rules set up to create that situation.
Yeah.
And when we do, like the hospital transparency rule, we don't enforce them.
Paul Seegert on the show this morning from PCS Healthcare Advisors, and a report coming out with unless Congress acts, and it's one of those deals where you got to cut off your nose to spite your face. There's so much subsidy coming in from COVID money. Once that expires and dries up, you're going to see those, and maybe it's you or someone you know, on an individual plan, meaning you buy it on the open market. An individual plan costs for Ohio are going to go up 29%. But hold on a second, if you're in Indiana, you're looking at 38% more cost per year for that same exact plan, which is how many people are going to be able to afford that. And then the other thing with this, Paul, so we'll have people coming off of obviously self-insured or individual plans. That's going to make those of us who have health plans through our companies or whatever, we're going to see our costs go up as a result, right?
Yeah, well, no one will be immune. employer plans will go up. In good years, they average about 6% a year in increased cost to these employer plans. That doesn't account for the fact that they usually get worse each year, too. So you shift costs by creating bigger co-pays and bigger deductibles and all that.
Yeah.
But the premiums on their own still go up 6% in good years when we don't have hyperinflation. And now our healthcare inflation is literally double what it was before COVID.
Okay.
So I'm not optimistic that the insurers are just going to come in and say, hey, don't worry, we'll handle this for you guys. Most likely we're going to see double-digit average increases for employer plans.
You've been coming on the show for a couple of years now, talking about nothing's changing.
Not very fast.
Not ever. We always talk about, how would we fix this? We just get rid of it. Everybody would buy their own insurance in the open market, and then there'd be no leverage in that regard, and so they'd have to appeal to the individual like we do with, car insurance, homeowners insurance, all the other insurances we buy. I get you get your insurance for your house. You just like, okay, well, how much is it? All right, great, I'll pay it. It's an annual thing. And healthcare is just, it's squeezing everybody because there's just so much. Yeah.
Bucks.
Right, exactly. It's incredible.
You only find out after. If you ask them what it's going to cost beforehand, they think that's a crazy question. No other industry would respond that way.
Yeah.
There is some reason for optimism when you look at what employers are doing. And it's a growing trend. If you're an employer with more than 5,000 employees, almost all of those employers have a consultant involved who is looking at the cost drivers inside their plan and beginning to identify the waste and get it out of the plan. And that's coming down market now where it is going to fix it. Employers are starting to run this like they do all the other units in their business. Mm-hmm. That's where the individuals are kind of left out in the cold because they don't have someone that's going to advocate for them, and the insurers aren't. The insurers are benefiting from the waste.
Yeah, you're a Thompsons gazelle. You're like the slow one hanging out in the back of the pack, and the lion's coming to eat you first, right? You just got to be faster than the second slowest gazelle, and that's how that whole thing works. And that's the model. I think of the two biggest things government are involved with. Three biggest things. I'll throw it all together, right? I go taxes, number one. Look at how complicated the tax code is in America. You got to hire somebody to figure out what should be something simple because of all the layers of bureaucracy and meddling from the government and tax code and all that. Healthcare, which we're talking about in college, right? Federal government's subsidize 100% of the loans go through the federal government. And so three of the most confusing, costly, and inefficient things I just rattled off. And what's the one component? The fact that Washington's got their hand in all of it.
Yeah, and we have good examples, like you pointed out earlier, where you have a cash payment model or just any model that doesn't include insurers, elective surgeries, LASIK, et cetera, where quality goes up and costs go down.
That's how it is.
When you can let the market compete.
All right. So the timeline here, I don't know if they extend this or not, but who knows? But if Congress doesn't act, you got to start looking at this now, going, okay, well, what the hell am I going to do? I can't afford 29%. Is there any is it going to, Paul, be either I buy the insurance at 29% more or 38% if I live in Indiana, or is there an alternative here?
Well, there are alternatives. There are medical sharing programs that are growing. You have to be a smart consumer in that regard because they're not all run equally well. But there are alternative options that are popping up because they're needed. They are certainly filling a need. And if you're willing to be a more active consumer and you're in that group of people that won't have any subsidy, you may find, even if you are a pretty darn good earner, that traditional insurance on the individual market is really, it just maybe isn't affordable.
Gotcha.
So you have to look into some of those other options.
Paul Seegert from PCS Healthcare Advisors. They consult businesses maybe like yours on navigating the treacherous road of healthcare. And here we go again. Paul, all the best. Thanks for joining.